Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, June the 17th, 2025. As you know, today is Tuesday. Gary's Market Forecast, or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, just as a reminder, those in MetaTrader, you need to update your dollar index futures on the U25 now from M25. So just as a FYI, picking up with the dollar index on the monthly chart, high level overview, we believe wave one is over. We're stair stepping lower in wave two. We've been watching this price action over the last few months to see if we can start closing below this level, which is very important, not only from our swing point low here in 2007, 15 years, as we talked about going somewhere to 115, 120 as our destination one. We reached 114.72. 3 years ago, we talked about a reversal, and now we're looking for a wave two correction. So this level is important, not only at a 38.2, but from the COVID low to the high, that's a 618 retracement. And we know the rules. You start closing below a 618 retracement, then you have a 75% chance you're going to go visit that 1448 and your 1272 extensions, which are roughly in the 85 to 82 area. So let me go over to the charting platform to show that to you. This is the charting platform, and we go over and pull back a little bit in time, show you that COVID low over here, and that is this here in 2000. So from that low to that high, we're right at that 618 retracement, still just kind of hovering right at that level. So it's important once we break below it. Why? Because you start closing with a candle body, not the wick. So you can see how we wick down under it. And now we're kind of back right at it. So that doesn't count. You need some candle bodies closing below this area. But once we start taking 98 out, then we have that 75% chance we're going to make a move down to this 1448, which is around 85, and a 70 plus plus, we're going to go toward 1272, around that 8240 area, which again is very close to our target zone. So this is why I'm watching this very closely. Now, it took us 3 years just to finally get here. So it doesn't mean as soon as we get here, we have to just go straight down. I don't think that's going to happen. It's probably going to take us a few more years to get down here. But this is a critical support and resistance level, that it was resistance over here, and it went to support to resistance to support to resistance. You go back into history, this 98 area is of interest. So as of the most recent price action, COVID low up to that high, man, we start closing below, right, Emil? We close below that 618 up here. Then it sets the tone. We're going to these targets. What do I expect in the interim? More of this chopping. Just chop, 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 chop. I do think at some point, once the dollar makes its correction, we will be breaking out. But I don't think this is quite it yet. Although I'd be remiss if I didn't mention that if we can't break the 618 and we start bouncing and breaking back up, then we could see some new highs, as opposed to continuing to break down lower and head this direction. I do believe we're going to get a deeper retracement. I don't personally think this is over, but it is what it is until price proves otherwise. And speaking of price, looking at the most recent price action, we've just been kind of chopping in this zone. Makes you think we're going to break it. Sure, we're going down. And we get these wicks, and then we just kind of chop, and we're right in that zone of that 618 retracement level, which is I showed you a moment ago. So we're just kind of right in this area. I really want to see a commitment below. So we're talking about going down and closing somewhere below these extensions down here. Then that puts us into this bigger retracement zone we've been looking at. And once we do that, I think the writing's on the wall. We should make that move. So for the bigger picture, watch this swing point low from COVID and the 618 retracement of that. So we start closing in the 98, 97 area. You can see right here, 618 is 98.67. The 786 is 94.49. So we start closing below this pink box. It is over. And highest of highest probability, we're going to come down and seek out the 85, 82 area. But the rule is from the low to the high, you start closing below the 618 with not just kind of dipping below, but make an honest move below it. Then the rule is we're still likely coming down here. So I'm not trying to say before I even feel comfortable we're going to come down here, we need to take out the 98 and the 94. Well, I think we start taking out the 98 area, the writing's on the wall. And if we continue down and take out the 94, then it's a confirmation of a confirmation that we're going down here. And this is why we gave you this target 3 years ago, that we're going to come down somewhere in between 82.78, kind of talking 80. That's where this comes from on this chart. From the swing point low to the swing point high, we're looking for a 786 retracement. Pretty simple. We're looking for a deeper retracement, but at no point do we expect this was going to break any lows. We were just going to get a retracement before then reversing and going higher. But I'm not convinced that this is the end of that move and we're going to go breaking out now. I think we are going to go lower before we reverse and go up higher. And also on our side is that super cycle wave twos generally are deep retracements. They typically go a little bit deeper than your typical 38.2, 50% and 618. So I would expect at least a 618, probably even deeper toward the 786. This is why I have this target zone down here. Fair enough? So in closing, dollar index should continue to chop. I do expect a breakdown in the weeks and months and years to come and a move toward that target. But right now, we're just having trouble breaking this prior swing point low. Even though we kind of dip below it, we're still right back at it, and these wicks kind of put us in that same area. So I'm not really looking for this thing to go ripping, but maybe a continuation of this little stair step that we've been doing. Consolidate for a while, get another little push. Consolidate for a while, get another little push. But be careful. I do expect some chopping. So for those of you trading euro dollar, pound dollar, yes, I expect the euro dollar and pound dollar have a lot more upside, as I expect the dollar index has a lot more downside. But during this chop period, the euro is going to go up, it's going to go down, it's going to go up, it's going to go down, just like the dollar index. So let's take a quick look. We reached our targets. Go back a few weeks when we talked about this. We go back months ago when this high to low, we talked about a bottom reversal. We were going to get a move toward the Magic Fibo, which was several hundreds of pips. And then when we finally broke that 108 target, we gave you this trade months in advance, actually. And when we finally got up here, We said we were going to go to that 113.60, 114.95. And sure enough, weeks and weeks later, we got there. Now we got another pullback. Is this the end of the pullback? We're ready to go break out? More than likely. I'm not saying we can't pull back some, but this appears that we're ready to go a little higher before we pull back. But what if, William Bruce, you know, that this actually comes way back here? And we come back to visit the Magic Fibo. If I see this baby pull way back toward the Magic Fibo, that is salivate country for us to get another bounce to go much higher. So be careful. This could chop and even pull back some more. I don't think we're going to get down here. I was expecting this to come down at this point, but since we, from the high to the low, we still haven't reached the 116.50, 117.16. So we did it again. Bigger picture, high to low, we broke the 108. 75% chance we were going to 113.60. We did it. 70 plus, we we're going to go to 114.95. That was accomplished. Now this recent high to low, we did the same thing. We closed above the 618, closed above the 786. So in this instance, that candle right there said we were going to 116.50 and 70% plus. We were going to go to 117.16. So this is why I'm really not looking for this bigger correction. I'm looking for this to continue to grind toward that 116.50, 117 area. At that point, maybe we do get another retracement, but that's why we always talk about price action, always stair step. Either in a strong downtrend or a strong uptrend, it always stair steps, as I like to call it, due to the software always cycling, different time frames. So be careful. I do think any dip should be bought till we get to these targets, because the writing was on the wall, just like it was over here. Again, when we got that closure, we knew we were headed this direction. So any dip should be bought until you achieve your targets. And then we got another high to low. We broke the 618. That said we were going up here. And then we closed eventually above the 786, which reinforced we're going up here. So what does all this mean? Keep buying the dips and look for your opportunity for price to hit these targets. Then what? Start breaking 17. We got 1850, 1892 up here. Onward and upward we go. And again, we are going to get stair step motion while we get pullbacks. Fair enough? So even if we get a bigger retracement, all I'm going to do is add to my position down here and continue to go back to these targets and back to these targets, and continuation with further targets to the upside. And if you're just joining us late, I'm not really looking for this to come way down there, because we already broke this level to say we're going there. We're not quite reached it yet. But even if it does happen, perfect opportunity to buy low, sell high again, buy the dip. In the interim, I think we're going to get a smaller degree dip before then we go up, and continuation toward that 1650, 1716 area. Pound dollar, ditto. We're grinding, grunting, laboring rise. We reached the first of the target from that prior high to low when we started closing above that 129 area, which we talked about weeks and weeks and weeks in advance. We talked about the pound dollar reversing here, making a move at least to the Magic Fibo, this orange line, Magic Fibo. Then we said when we started closing above 129, which occurred over here, we had a 75% chance we're going to 136 area, and a 70 plus we're going to 137.97 area. And so far, we finally grinded to and reached our first target. So does that mean we have to get a pullback all the way back here? Not really expecting us to pull back that far either. But what if it happened? What if we come to the support zone? Add to your position. What if we get a much bigger correction toward the Magic Fibo? Add to your position because we still haven't achieved these targets. What happens after we take those out and we start breaking higher? Well, this one's way up here at 142.50 area. So rinse and repeat, rinse and repeat. Now, why are we getting this pullback? The dollar's bouncing a little bit. But I don't think the dollar is going breaking out and this is going to go breaking any new lows. I think we're going to continue this stair step higher. So what does that look like on the pound dollar? Looks very similar to what we're expecting the euro dollar to do. The bigger picture is we're looking for a roughly a 50/618 retracement. So if the dollar moves down to that 80 area, which we're targeting, then the pound's going to go up here somewhere between that 157 and 170 level, which I'm kind of fine tuning somewhere in that 160, 165. Amen. And what is this monthly software going to continue to do? Keep slingshotting, turn over and slingshot, turn over and slingshot, turn over and slingshot. And we just keep grinding higher in the years to come. When we talked about this reversal here, I said that this retracement was going to make thousands and thousands of pips. And all we're doing is expecting some sort of retracement before another push lower. But here it is 3 years in, and we got still thousands of pips to go. Not too shabby. And from the euro perspective, same thing. The dollar goes to 80 or lower. This baby's going to 135, 146, kind of fine tuning the 140, 145 area, but this is a high probability. On Tuesdays, we do look at a little Elliott wave, and my latest Elliott wave is simple. The euro is simply in this A wave going up to a B wave, which is off the chart up here. There it is. So all this multiple years of a move is simply a B wave up, and we're stair stepping our way up there into that target zone. Then we'll look for another big C wave coming back down years to come. But that's the plan. The dollar was only to give a retracement before breaking a new high. So the euro dollar should do a retracement before breaking back down. Now, depending if we get here at 27, 28, maybe we could get up there by 26. We're, halfway through 25 and counting. So could we go another couple of 2-3 years? Maybe. And we get here at 28. Well, we probably wouldn't be reversing to come down back to this A level and probably to the 2030s. So, but that's the bigger picture. I was short the euro dollar, pound dollar for many years. Now I'm long the euro dollar, pound dollar for many years. And then I'm going to go back short the euro dollar, pound dollar for many years. I'll let you know when that time comes, but the target is up here that we've been talking about for over 3 years since this bottom reversal. And most recently, since this 102 bottom reversal, we're still working our way to that target. Fair enough? All right. So any questions on where we think we're headed? Already reached target 1 for the pound. Target 2 still outstanding. Target 3 up here is eventual. But we're still going to be chopping around while the dollar finally decides it's going to break down. When it does, these babies are going to go popping. Inverse relationship. When the dollar goes down, the euro dollar goes up. When the dollar goes up, the euro dollar goes down. Inverse relationship. If you ever ask why is that the case? Well, the dollar index is made up of a basket of currencies, and the most predominant currency in that basket is the euro dollar. So when the dollar is strong, the euro dollar pulls back. Dollar's in the second position. When the dollar is weak, the euro dollar goes up. So this is why we're expecting that dollar to give us a bigger retracement down toward 80. And during that period, the euro is going to reverse from that 0.95 and work on our target up here, still thousands of pips away. Somewhere in that 140, 145 area is the plan. Amen. So keep buying the dips. Still expect some more upside. On the short term, we haven't quite reached our 116.50, 117.16 target like we did previously. Our other targets, 113.60, 114.95. But again, this is why we use this tool. The high to the low, you break a 618 with a candle body, not a wick. You have a 75% chance you're going to go to 1448. 70 plus, you're going to go to the 1272. We did that. Now, Ian, we're doing the same thing. We're closing above, so 75%, we go visit 116.50, which is a little bit over 120 pips still to come, and probably could be more as we get a little bit more of a pullback, and then the 117.16. That's what it does, rinse and repeat. And again, the pound, from the recent high to low, we have only reached the first target. So we still have another target at 37.97 up top, 70+% chance we're going to reach it. So this gives me good high confidence that any pullback should be bought as we grind higher toward this target. I would not be shorting the pound, expecting this to go down hundreds and hundreds of pips to bounce. But worst case scenario, it does do something like that, like to the support zone to bounce or a little bit deeper toward the Magic Fibo. That's just a perfect add to your position to continuation of these targets. Fair enough? All right. What about the dollar yen? Just like the dollar index is chopping and grinding, the dollar yen's doing the same. Is it possible we need to get a little bit more move? I'm still looking for lower highs, lower lows, and this descending trend line we've been getting as of late, these lower highs, lower highs, lower highs. So I'd be real careful about going long here. We're probably going to get rejected and a push lower, and we haven't quite reached, again, the same scenario. From this swing point low to that high, we started closing below the 618, which gives us a 75% chance we're going down to 138. 70 plus, we're going down this 137.50 area. So this is why I'm not real bullish on let's buy long and look for this thing to go up, thousands of pips to the upside or even hundreds of pips. Not looking for it. Looking for another fizzle manizzle and another push lower. Then from this bigger picture, we can see, we talked about this weeks and weeks ago, from this low to that high, when we started closing the 618 area, we had a 75% chance we're going down at 136.80, 70 plus we're going down to 134.45 area. And when we close below that 146, we got about a 700 pip move lower before this chopping consolidation zone. But that's why any rallies, in my humble opinion, should be sold, because in both cases, the recent low to high, it says we're going down here. This low to that high says we're going down here. So I'm definitely looking for rallies to be sold more than this thing to go breaking out. Fair enough? All right. Pound yen, be careful in this zone as well. With the market pullback that I'm expecting, when risk aversion, the yen tends to strengthen, and we could see this sell off very strongly. It's been grinding and testing this zone. We got a lot of resistance above, and it's probably due for a deeper retracement. So I'm watching for a huge trade setup. From the low to the high, we start closing below this 618 down here. Then we have a 75% chance we're going down to 82, 70 plus to 81 area. So this is why I'm watching that very closely. And all of this looks like a potential A. All of this chopping, overlapping is an ugly B, B wave. And when that's done, we should get another push lower in a C wave. And pay me now, pay me later. We talked about this years ago. If you'll remember, from a monthly view, when we had this price action down here, I said we were likely going to go back to visit this high and make a new high. And it took a few years to get up there, but certainly did. Went those about 9,000 plus pips we discussed. Big picture, people sometimes lose. Well, I want to know how to make money today. I could care less if it's going to go 10,000 pips a few years from now. I want to know what it's going to do today. Well, this is how I trade personally. And I like the bigger trades that I stay in for some time. Now, we're due for a much bigger correction before this thing's over. So be careful to the upside. Anything can happen. But again, with the markets, we go to war, anything breaks out. Elizabeth, I'm coming to join you, honey, and our markets are due for a big top and reversal. If it's first of next year, latter part of this year, this thing's going to give us a big pullback. How do we know? 2007, when the markets had a big crumble, it went down. Dot-com bubble burst, it went down. So that's what typically happens. Risk aversion. When the markets are plummeting, the yen tends to strengthen and these pairs tend to go down. Fair enough? All right. So on the most prominent right side action, got a nice little rejection off of this and a bounce. So this could be what's playing out. And this latest move up, we got the first leg and there's a little three-wave correction off of that first leg down, a little three-wave up, and then the next leg down. More than likely going to end up with a five-wave move lower, but I'm definitely looking for some lower lows in here. And if it's an equal measure, Mr. Tucson and others, you can use this arrow and from the recent high down to that low. If we do an equivalent type of move, Emil, that's going to put us, and if we don't go much higher than we are, that's going to put us right around our Magic Fibo on a monthly chart, which would be these extensions as well. So be careful to the upside. We got our big move we were looking for. Now we're looking for a bigger correction before then potentially looking for some more upside. And I don't mean short term. Well, Gary, the pound yen just went up 150 pips. And from this swing point low down, it dipped down to 184. We're up 1,200 pips off of that reversal over the last few months. Yeah, but it's still corrective. This does not look like a three-wave down in order for us to go breaking out. This looks like the beginning of a this three-wave B, and we come down in C. Whether you like Elliott wave or not, the technical picture is screaming. We're eventually going to go down. So be careful on any big rally on this. Maybe we have to go back and test this 99. We go up a few hundred pips more, but I'm still looking for a lower high over here and a lower low in the longer term. Fair enough? All right, let's continue. What about ES? I expect more chopping action in this. You know my feelings. Let's go to the current price action on a daily chart, and I'll pull this back a little bit. We reached our extensions from this recent high to low. Let me pull that down, right? Actually, let me remove some of these. I have so many on here, numerous of them. But from this recent move, that high to this low, we reached our extension. So that's pretty much done. I really don't see us breaking out. I don't want to see us breaking out. The more we continue to go on and break all-time highs, if this just keeps trotting along and we go on to break all-time highs, then our bigger Elizabeth, I'm coming to join you, honey's coming sooner. I made a statement a long time ago that before we break 7,000, we're going to break 4,000 to the downside. Most people call that their predictions. I do not make predictions. I can estimate with the best of them. I anticipate. I do it all. But I leave the predictions to the prophets. So before we break 7, we're going to break 4. And my bias is we're due for a bigger correction before we then go a late summer into fall, maybe end of the year, blow off top, and we get up here somewhere around that 6,600. That's kind of the plan. Well, I don't want to see us continue to break a new high, which we're not that far from, got 100 points or so. So I don't want to see this continue to go breaking out. If we do, that sets up what happened back in 2007. I've shown you this several times, but it is eerily the same. So we go back to a higher time frame and we show you what that looks like, and it is not pretty. In 2007, when the financial crisis hit, we had a very similar pullback and a V-shaped recovery. We went on to make new all-time highs, followed by a 57% decline. So if I zoom in on here, I'll show you what that looks like. I'll go to a 3-day, because that's the 3-day area which the Magic Fibo is what we hit. And I'll stretch this out. But this is eerily the same what we're looking at right now. That's why I don't want us to go on and make new highs. I want us to get that bigger pullback, then we can do it. So right here, Ian, Mr. Tucson, others, was this move here. We kind of chopped, made a new high, went down, bounced off the 3-day Magic Fibo, basically did a V-shaped recovery, went on to make all-time high by about 20 points from, what was that, about, let me just put a cursor on there. High was 1544, 1529, so 1545, or there it is, 1555. And then we broke that high and went up to a high of 1576. So 21 point higher move. And then we ended up with a 57% decline as we came from this high down to that low, which was a 57% decline. This is coming. This is what I'm referencing. Elizabeth, I'm coming to join you, honey. So, can we see another 57% decline? Yeah. What really makes me nervous is this was on a 3-day, right? See a 3-day chart? And we got that price action. So let me go back, let you see this blown up again, and look at current price action, but on a weekly chart, this looks almost identical. Well, chop, pull back, pop to an all-time high. We went down, bounce off the Magic Fibo, and we didn't get a 618 retracement anywhere along the way. We just kept going and going and going, broke all-time highs, and then 57% decline. Ouch. Well, look at the current price action on a weekly chart. And I'm going to move this back to current times, bring this back to where price needs to be. But this looks eerily the same. I'll zoom this in, stretch that out. That looks just like that 2007. Kind of got a little pullback, went on to pop all-time new high, came straight down, in this case, to the weekly. And since this move, we haven't had a 618 retracement, same kind of thing, just V-shaped, continuing to grind higher. So now you can see why I want to see a correction first before we go blowing off top. Well, what if, William Bruce, this just continues to climb and climb? I think we're going to get a higher high, make all-time new high, but then we're going to get the Elizabeth, I'm coming to join you, honey, sooner. If we don't go breaking all-time highs and we get our 3-wave correction, which I still would love to come somewhere around this 5,400, fine tuning somewhere around that 53, which would be a 618 retracement. What is it? From the low to the high. So we can update this and get the most recent. Let me move some of these things out of the way, and I'll show you what I'm talking about. It doesn't move it by much, But from that low to the current high, which happens to be right here at this juncture, we tried to break out, hit those low extension targets, and then we failed and pulled back. We tried to break a lower high so far, and we kind of got a rejection wick. Maybe this is the beginning of that correction, but all we're looking for is this green box somewhere between a 50/786 retracement, and sweet spot would be my 618, right around that 5300. So be careful to the upside. We're due for a correction. Love to see this take a few weeks going into maybe July, maybe through July. Then we go August, September, October, November, going into the end of the year, where we get the last blow off top, all-time highs, pushing toward my 6,600 target. So my statement was before we break 7, we're going to break 4 to the downside. Before we break 7, we're going to break 4 to the downside. So this wasn't it. I warned you about a correction, and this ended up being tariffs. Well, they try to bring the technical picture said we needed this before we could continue to all-time highs. And after this latest recovery, I want to see another correction before we go blow off top. But all measures, whether we keep going, get more of a truncated blow off top before we go down, or we get the bigger correction first, then we get the bigger blow off top, pushing toward that 6,600 range. Then we get the Elizabeth, I'm coming to join you, honey. So pay me now, much sooner, or pay me later. We're still going to go back below 4,000. And you see the Magic Fibo, the only one that's below 4,000 is the monthly, right around that 33 to 35 area. And what if we take a plunge of 57% from current price action where we are? We get that 57% like we did in 2007. That puts us around 2,600. What? From 6,000-ish down to 2,600? Yeah. And what if, Emil, we decide that's not enough because this was on a weekly chart we did the correction, and the other one was on a 3-day, and I'll go to the weekly on this just to keep it on the same time frame. What if we do that and we go a 618 retracement? Which would be a little bit bigger than obviously 57. 618 would put us, trying hard to get there, but somewhere around this 2,300 area. And what if we get a 786 retracement? That would put us somewhere around 1,200. So this box down here is highly probable where we're ultimately going to finish. But my minimum target to the downside is going to be the Magic Fibo right around that 33.35. This is the bigger picture where I think we're ultimately going to correct. So when this finally happens, we're going to get a multi-year correction and work our way. Maybe we come down Magic Fibo, go a few years higher, then we come down into the late 20s, maybe 30. So don't go by the scale thinking, oh, we're going to be down here in 26, we're going to be up here in mid-year, then we're going to come all the way down to this 2,500, 1,200 zone somewhere by 27. Don't pay attention to that. I think it's going to take longer than this, but I'm just saying I'm looking for a big correction before then we can go on to rinse and repeat, go on to some all-time highs again. So the writing's on the chart, and it doesn't matter if it's the events. Is it war that does it? Is it a fiat currency that fails? Is it another housing or real estate? We got a lot of houses available. Interest rates are high. People aren't buying houses. Could it be another real estate bubble burst? What is it? Commercial real estate? A lot of commercial buildings out there all sitting empty. A lot of things. Plus our debt's going to 37 trillion. What can it be? I don't care what the reason is, the technical picture screaming we're coming down here. Minimum here. And then I think even when we hit that, that's not the end where we go breaking out to all-time highs. I think that's going to be part of the correction to where we go and eventually come back. So again, going back to the previous history, dot-com bubble burst over here into the 2007 financial crisis. Doesn't look like much, but we just showed you those were some big corrections. 57% from that high to this low. Big correction. Even the dot-com bubble burst was a big correction. So after it was all said and done, all this was an A, B, C type of correction. And from 2000 to 2009's bottom, we didn't go breaking all-time highs until like 2013. So from the highs over here, by the time we started really breaking out to some new highs, was 13 years later. We could have this type of thing again. So it won't be all doom and gloom. When Gary would go from 6,000 plus 6,600, for example, down to 2,600, that's a huge move. And then we go straight down and that's the end. No, we get a correction. We have even years of some upside potential and then another push lower. But all that was a three-wave correction. Not two separate entities in Elliott wave speak. This is a bull market run. You get a big three-wave correction. You get your next bull market run. And we've been parabolic. Since this low on a monthly chart, we haven't seen a 618 retracement. Even if, and I did this the other day in class, even if you take this low, that was not a 618, up to this one, not a 618, even up to COVID, lows down here, that was only like a 50% retracement. So we haven't had a 618 retracement on the way of this parabolic, we call that a life cycle. And we're expecting market cycle, psychology of a market cycle. We're due to come back toward the base, which is this zone. So I think minimum 3,500 because that's where the Magic Fibo is on the monthly. But we're likely going to come down into this zone, which is a steeper retracement. And we're due for this. Long overdue. So no matter what the reason is, war, fiat currency failure, commercial bubble, real estate, whatever, it's coming down. Mark my words. Think it's not going to happen? Remember what happened here. Never going to happen. There's no way we're going to go from 1,500 down to about 700. Can't happen. 57% decline later. Oh, yeah? All right. So, again, even during the pullback, you can make a lot of money to the downside, many ways to play the market. Then even during the corrective moves, you can have some bullish times. And then even on the down move. And even in the thick of the down moves, we typically get these 618 retracements along the way. So at some point, I do expect as we start coming down from the bigger picture, we're going to get a move lower. And then we're going to get a 618 retracement after it stops going down. We get like a 618 retracement to set up the next big move down. So there will be some bullishness in here along the way, but it's going to be multiple years. Amen? So what can you do for me now? What about today? Break out your axes and chop. I expect a lot more chop, but I'd be very cautious to the upside. Extremely cautious to the upside because we're overdue for that bigger correction. So is this the beginning, a high, low, lower, high rejection, and we start breaking down? Or are we going to just continue this punch junk euphoria and we go on to make some all-time highs? Then we get the bigger one. So you can put that in the book that whether we go up now to make all-time highs, we're going to make a big move below 4,000, or we get the bigger correction now, and then we get the big blow off top into late summer, into the year, or from late summer into the fall, late into the year type of thing. Well, I still think we're going up here, but I don't see us just keep grinding straight up there. I think we're going to fall short And then we're going to get the bigger one if that happens. Otherwise, we need a big three-wave correction to set up that big push toward the late fall, end of the year. Amen? So be extremely cautious here, as I don't think we're ready to go breaking out. And I'm looking for that pullback. NASDAQ, same thing. It tried to make a breakout. It went to the extension, the high to the low. We got the extension move. And what's up now? Caution. This is eerily the same. And from the bigger picture on this, we can see we topped out on the NASDAQ back in December of 24. Actually, 23, Monday the 23rd, December 24. So we topped out here. We made a rally to a lower high, came down, tariff talk. We go ripping back up. We're still at a lower high. We're testing that lower high trend line, wicked above, but we're still so far holding below it. So this is screaming the same. I'd love to see a big three-wave correction in here, then follow a blow-off top, which for the NASDAQ would put us in this upper quadrant, 25,000 to 26,000 is the plan. Minimum 23 to 26, fine tune here. But if we just keep grinding, then maybe we get to, we got to go back to 22.5-ish. So maybe we just get to 23-ish, then we get the big one, or we get our correction followed by the blow off top where we start pushing more 25, 26 area, then we get the bigger move down. So word of the day is be careful. War could break out at any moment. The markets overnight kind of responded. Oh, Trump saying everybody in Iran needs to get out of town. If they dare blow up any of our bases or do anything to American citizens, you bet you we need to go in there and take care of it. Those people are insane. What are they doing to Israel? They're bombing their most inhabited cities where they know pedestrians and everybody's just sitting there, innocent people. It's insane. They're sick. I digress, but this could break out at any moment. And typically the markets are going to get a little shaky when that happens. So do we fluff it off and continue to grind higher? We get the big one sooner, or we get the bigger correction followed by a late summer, going into fall, end of the year, get that blow off top. But either way, Elizabeth, I'm coming to join you, honey. Here comes the big one. Is, in my humble opinion, I guarantee it's going to happen. No ifs, no buts, no ands. So do we go up here first and then, or do we get our correction followed by another big push and then we get it? But it is coming. Where is the NASDAQ likely to go? Minimum, the monthly Magic Fibo, which is down in this 10, 11,000 range. What? We could rally up into the 20,000 plus and still get a move back toward the Magic Fibo? Yeah, that is definitely the plan. Amen? And you go back, and we don't have quite the history on this one that we do with the SPX. Let me see if I got it on this one. Yeah, this one goes back further. But you can see during the dot-com bubble burst, we reached the Magic Fibo. During the 2007 financial crisis, we reached the Magic Fibo. So guess what? Whatever it's going to be called, World War III, fiat currency fail, another bubble burst, whatever, we're due to come back toward the Magic Fibo. Amen? So be careful. I do think we're going to get new highs. We're going to get some all-time new highs in here. I just prefer before we get there, we get a pullback first. And I'm looking from the tariff talk low here to the recent recovery. I want to see a 618 retracement in there. So what are we talking? We're talking in the neighborhood of, and I'll bring this back so you can see it. We're looking for around that 19, Let me go over here. I got it on NQ1. We're looking somewhere around that 19,000 to 17.5, sweet spot around that 18.4, 18.5 area. Off of that low to this high, 618 retracement. That would set up a beautiful move higher. Amen. So what would that look like? That low, this high, we get a three-wave correction in here, pushing us out to July-ish. It's kind of the time frame. Then from summer-ish, late summer, into the fall, we get a big, beautiful blow-off top somewhere between that 25, 26,000 range. But this is critical. We get a three-wave correction. If we don't, we get a five-wave down, followed by a three-wave correction. And from that high to low, it ends up being a 618. So what are we saying? We get a five-wave correction out of here. Then we get a three-wave correction that from the whatever the high is to whatever the low is, it's a 618 retracement. That is flashing, crash, 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 look out. And that would mean this guy up here is off the table. No all-time high blow-off tops. If we get a five-wave down, three-wave correction, and it stops at a 618 and gets rejected, look out. But what do I think is going to happen? I think we can get a three-wave correction followed by late fall, end of the year, blow off top. And then we get Elizabeth, I'm coming to join you, honey, going into late year, early next year. Amen? So be careful. Could this thing continue higher? Yes, it could. But I don't want to see it until we get that correction in a three-wave manner. What about the Russell? Russell is the weakest of the group. It is struggling from that recent push into the low. I still think we're going to end up with a lower high, lower low. And this is screaming even bigger picture. High, low, 618 retracement, rejection. So we need a push lower, and this baby is going to give it to us. We talked about this last week. I got a put spread going down, pushing for this to go lower. 180, 150 put spread out to September. I'm looking for this to push down. Even if we just get a 618 type of retracement as we push down into those numbers, I'm going to look for this, and that was on IWM, so I'll go there in a second, but the same on RTY. Looking for a potential, maybe a three-wave, and then if we hit that perfectly on everyone else, then we get one last push into this resistance zone. Then I'm going to push another put spread way out to 27, late 26, 27. So get in one now, short term, longer term, we get another push. Then we set up a bigger one. But the target down here is 1400, 1200, highest probability. So IWM, same thing. I bought the 150, sold the, bought the 180, sold the 150. And I'm looking for this to go all the way down. And even if we get into this zone, so Emil, by September, I expect we're going to at least be here, if not much lower. So what happens when we start to get the big push? Great. I'll close that spread for whatever profits I have. We do get the next push higher into the zone where the ES, NASDAQ, et cetera, gives a correction. They go the blow off tops. Well, what would IWM's blow off top look like? Pushing this upper boundary toward that 230 area. So move lower into the 180 area and then push up to the 230 area. And then we do another put spread going out to 26, 27 and push it way out. So when we get the Elizabeth, I'm coming to join you, honey, this baby's going to crumble. And again, the target is at least 140 to 120. And this thing could even go much lower, down into the 100 area. So short term, we're going down. Even this bigger picture, we topped out way back. If you go to like a weekly chart or a monthly, IWM theoretically topped out back in 21. And we got all the chop we rallied into. And remember my statement back then, before we go breaking out to all-time highs, we're going to have to break below this 1600, or in this case 160 area, where we tested multiple times. So all this overlapping chopping price action is screaming we need a new swing point low below all of this. So this is why my short-term put spread, and if we get the blow off top, like we're talking about toward the end of the year going into 26, then I'll push this out to 27 or as far as I can go for this baby to go much lower as we ultimately break below this low and target our 140, 120. If that doesn't hold, then down here probably around that 103 area. Any questions? No buy, sell to hold recommendations. I can't tell you what to do. I'm just telling you what I plan on doing, and what I'm currently doing is I'm short with that put spread, pushing for this push down between now and September as we go through, and it probably won't take that long, but I wanted some extra time. I'm looking for this to push into July, August maybe. Then we do a blow off top toward the end of the year. Then we set up another one. What if this thing just keeps going? Then if we get down to 150 ahead of time, then I'll just close it for maximum profits and then look for any big retracement after that. And then we do it again. But if all plays out the way it's supposed to, this should only come somewhere into this 180-ish area. Then we bounce and go into late fall toward the end of the year. And then we sell it again going into 27, 28. And Elizabeth, I'm coming to join you, honey. And yes, sounds insane from 230-ish to go down to 120. Yeah, 140, 120. That's the plan. Amen? All right. Dow, for those of you that look at the Dow, it too is doing basically the same type of move. Let me stretch that out, move it over. We got the weekly bounce. We're going into the 618786 zone. So what I'd love to see the Dow do before it goes blow off top to this area up here, that 46 to 50,000 range before we do a blow off top. I'd love to see from this low to the high, love to see a little three-wave correction into a 618 type of move. So maybe we move down toward this 39,000 area, something like that. Then we go bouncing blow off top, matches the rest. But be careful, even if we start grinding and we go to all-time highs without the correction, then Elizabeth coming to join you, honey, sooner. We get the three-wave correction, blow off top going into the end of the year. Then we look for Elizabeth, I'm coming to join you, honey, going out 26 and beyond. So I still think we're going to get an all-time high in here. Only way we don't get another all-time high, which is the least likely, that would be our five-wave down, three-wave correction, and then this would be the top, and this would be off the table. So the only way we don't get a blow-off top is we get a five-wave correction down followed by a three-wave up, and it ends up being from the high to the low, a 618 retracement. That flashes crash, and this takes this off the table. Otherwise, higher percentage, looking for a three-wave correction, blow off top, new all-time highs. Then we go into 2026. Elizabeth, I'm coming to join you, honey. Fair enough? Global liquidity, looking at the Nikkei, still kind of chopping in the same zone we've been in a while. We need to break 40,000 up here, kind of stretch these out. We were just kind of chopping in there. We're right back in it. We broke below with the tariff talk, then we're right back in it. So I still think there's a good chance global liquidity is going to show when we all do blow off tops. Nikkei is going to do the same type of thing, maybe toward 44, maybe 50,000. similar to our Dow kind of numbers. But I'm looking for a three-wave correction, followed by that blow off top, then the big one. If not, and these babies just keep grinding to all-time highs, then we get the Elizabeth, I'm coming to join you, honey, sooner. Any questions? All right, got a potential trade set up that I want to bring to your attention, and that is Rocket Labs. I believe I wrote that over here. RKLB. And go over here to a daily chart. And we're looking at this scenario from the prior high. We got a beautiful measured bounce coming off of the Magic Fibo. And we're testing this zone right now. So I think there's a high probability, Mr. Tucson and others, we're going up to 3640, 70% chance we go around that 3875 area. So remember, these are not etched in stone, they're like areas. So I typically, that's where this 1448 came from. This is not a Fibonacci number. It is 90% of this 1272, which is a Fibonacci number. And I take a little conservative targets, but I figured over many trades and a long time of analyzation, 75% we go here, 70+% we go there. And this is already in the cards from the high to the low. We're already there. We got the close above the 618, so game on. Now that price is pulled back, you're right at your entry point, and targets 36.38. It could take some time. What if I see it pull back to Magic Fibo? I'd add to my position. So if you buy a few shares, hold it till it gets up here, or buy more shares. If it pulls back, then you don't have to worry about it. If you're using options, then that's the toughest part. How long is it going to take to get there? But this kind of already set up. Beautiful bounce off the Magic Fibo. And we got a 618 retracement already set the tone. We're going to 36 and 70+%. We're going to 38. And we got a nice area where we're testing right now. So what if I get this pullback? I'm just going to add to position. A lot of these, I just buy shares. Some I buy shares and options. But you need to give it at least several, I'd give it a few months. If we get this correction into July and we do blow off top toward the end of the year, and not to say this thing couldn't go here in the next few days, just finish this up. It is what it is. But there's a high probability target. So when I saw this bounce, own a few shares down here. If we get this pullback back toward here, I'll add more shares. Then it doesn't matter when it gets up here. Do I think it's going to reach this? You betcha. These targets, again, 75%, 75 and a 70++%. The question is when? Well, the deeper we go, add more shares, and it doesn't matter. But if you're doing options, I'd definitely give it some time to get up there. Based on what we're talking about, we're due for a correction. Then we're going to look for the blow off top going into the latter part of the year. Not to say that during that period we couldn't reach these targets first. Sure. We'd come back the end of this week and this thing could be up here. But it's the same setup. Magic Fibo bounce, closed above the 618, target still outstanding. Let's continue. What about some of our bigger trades? Tesla. Tesla looks like on this daily chart, we got a little, looks like a B, C type of move. And I'm looking for another push, maybe back toward this Magic Fibo, this much smaller move right here. The Cybercab, robo-taxis were supposed to come out on the 12th. Now it's saying it's the 22nd, which I believe is this Sunday. Yes, this Sunday. So could that be the stimulus that pushes this thing higher? Well, just looking at this smaller degree move, as this little A, B, C would come back, and this would be a what? Low 618 retracement off of the low to the high, right around that magic Fibo. And we get this little three-wave correction finish playing out before we go berserk. I still think Tesla is going to take over the ride share market, and that's going to send this booming into the 600 target or higher. And that's the plan. So what am I doing about it? I own a lot of TSLL. I'm expecting TSLL to go booming to the stratosphere, target up here in the 50, 60 range, just like we did back in October of last year. We said that Tesla was going to make a run toward 500, and you might consider the TSLL trade. It went from basically $9 to $41. And we did that via our, I believe I still have this open. Go back in October of last year, right there. Expect Tesla hit 500. Consider this trade. I said armchair quarterbacking. This was live action in that class. And boom, it went up to 41. So as we started getting back into this, I expect Tesla to make another run toward 600, 45 to 60 target range. And we talked about it as TSL, the lower it goes, the more you should add. And when we broke 15, that was my nibble point. And the lower we went, the more I added. And sure enough, I'm glad I did. And we still got a long way to go. Yeah, that's the plan. So are we going to get a repeat of this? My humble opinion, that's still out there. Yes. That's why I own the shares and I don't have to worry about option expirations. If it takes 6 months, by the end of the year, is it up here? We shall see. But that is the plan. And this thing could start ripping any day. Maybe it's the announcement on the 22nd, and next week we start to see some of this ripping higher. Either way, we get a bigger dip. I'm adding more to my position and looking for this to go much higher. But that week when we were down here at $6 and we were testing this $6 range down here, that just was screaming, add to your position, add to your position. And it almost tripled on that first run up. So this is the beginning of what appears to be a much bigger move, especially as the cybercab robo-taxi gets rolled out officially. And I think with the markets doing a blow off top into the end of the year, this gives great expectations for another one of these. We did in October from 9 to 41. We could got in at 6, heavily at 6, started nibble around 15, et cetera, et cetera. So we're still up, still sitting more than a double off of the low. And I'm looking for this thing to go ripping in the weeks, months to come as we push toward the end of the year. All right. My other one I like a lot is with the Bitcoin run. And that is, I actually have it in this Ninja Trader platform, CONL. CONL is the leveraged ETF on Coinbase. And as Bitcoin goes blowing off top into its 150 to 175,000 and higher range, minimum 150, more likely pushing toward that 160-ish to 175, if not higher, this baby should go ripping. Just as we were down here and Bitcoin made its initial surge, now we're just kind of sitting here while Coinbase is the underlying. I expect Coinbase to make a big run. So even if this is a big disappointment, we're still looking at this thing doubling, tripling, getting up here, should even make new highs. Because the last time Bitcoin made its run, we got a nice pullback. but I'm expecting when Bitcoin goes ripping, this baby's going to rip too. And here's Coinbase, same type of thing. Got a nice measured bounce off the Magic Fibo. So let me stretch this out a little bit for you. Got a beautiful correction into the Magic Fibo. I'm looking at this thing to go breaking out. And I think there's a very high probability from the high to the low. We closed above that 618 previously. So that says, based on that scenario, right, Mr. Tucson, when we closed above right there at those highs, we have a 75% chance we're going to go visit 380, 70 plus 400 area. I still think that's still likely as Bitcoin rips to 150, 175 and higher. This Coinbase is going to go ripping somewhere toward that 380, 400 range. Amen. So we shall see how that plays out. But its counterpart is the leverage product. And if Coinbase goes ripping up, that could open the door for this to go somewhere around this $80 to $90 range. Again, no buy, sell to hold. But what happens when Bitcoin is up at its target, no matter where this guy is? If we're at $50, $60, $70, $80, wherever it is, when Bitcoin starts to hit its target, I'm going to be closing and taking profit on all these trades. Fair enough? But those are just some of the ones that have been setting up. And as I like to say, I like it. So, yep, we might get a little further pullback. The further we pull back, the more I continue to add to my position for the bigger move on TSLL, etc. How about yellow gold? Be careful with yellow gold. I still think we're coming down here. I still think there's very high probability we're not going to go breaking out just yet. We're long overdue after this big run. We need a bigger correction, and maybe this was the end and we're ready to go breaking out. But since this low, we're still getting a lot of overlapping chopping action, which makes me believe that this is part of an A, this is a B, and we're going to get a C correction. Then we're going to get the big run. So my humble opinion, I would not be going long gold here. I would wait for the pullback to then set up the much bigger run. And the next bigger run in the coming years is going to be 5,000 off the chart up here. But we do need this bigger correction. We haven't visited that Magic Fibo in a very long time. And the longer you do that, the more likely you're coming back towards it. Amen? So, any questions? I think this is going to be the high, the low, the lower high, and we're going to push lower. I've been calling for this the last few times, yes, and we're grinding just a little bit deeper, but still looks like the same picture. Too much overlapping, chopping action to be a three-wave correction and this thing to go blasting off. Because if that was wave one, wave two, wave three, that's too short. Typically, it's the longest wave. And then we come back and overlap. And even after this new little breakout, we're back overlapping. So all of this rally, pullback, rally, overlapping, chopping action at a lower high. So we can draw one of these in here at a lower high. Kind of sets the tone for that last flush. And that's what we're looking for. Amen? So, if this is going to be equivalent type of move, let me move these out of the way and take from that high to this recent low. If that's the initial wave and all of this is the corrective wave, then we're looking at a similar type of move, which would put us near this Magic Fibo. All right? But this looks like a three-wave, a kind of a three overlapping, and now we need a five-wave down. 1, 2, 3, 4, 5. So I'm looking for somewhere around 3,000 to maybe 2,700 before we're done. So corrective action down toward the Magic Fibo slash maybe somewhere between that 3,000, 2,700 range. And when price gets down to 3,000 or lower, that is a good opportunity to add to your metals portfolio as far as for gold, and look for this thing in the years to come to go up toward 5,000. Any questions? Be extremely careful here. This is screaming a big down move. Amen? Silver, and maybe gold's waiting for silver to finally fizzle on out, but maybe we got to go just a little bit higher. We reach the targets, so anytime could we go up toward 35? Maybe, but I'm a big proponent of silver, as you well know. This SLV is going to $60/$70. No ifs, no buts, no ands, but I want to see that bigger correction. So what the plan is, now that silver is truly breaking out, is to get that correction. When gold makes its correction, I see it pulling silver down with it. And if silver can come back toward the Magic Fibo, I'll load up and add more to my position, buying more shares. If we get a much bigger pullback where gold pulls back and silver does not hold the Magic Fibo, then we might get that push into this lower 25 or lower area. All I can say is if we go to 25 and lower, I have some good till cancel orders to buy more shares down here at 25 and lower. Load the boat up, because if we can get that far down, great. I expect we're going to 60, 70. Where does that come from? Higher time frame. Kind of compress this for you. From the prior high to the low, we're looking at a move to the $60, $70 range. Here's my big green box. So Mr. Tucson, others, Emil, James, Ian, we're going. No ifs, no buts, no ands, no exceptions. Do we get the correction back to the Fibo or lower? All I can say is we hit the Fibo, I'll probably add some more. We hit lower, I'll add some more. 25 and lower, like I said, I got those good till cancel orders. And yep, definitely think we're going 60, 70. And that could be the tip of the iceberg. Maybe we go to the next extension, it's 9,400. Well, think about it. Look at gold. From its high to low, we're already reaching the 272, 2618 extensions up here. Right? Already reached those and surpassed it a little bit. But silver, with the same scenario, we hadn't even broken out yet. Right? We're just kind of hovering around that 618 retracement. So imagine if silver starts catching up with gold and we start getting to that 272, 2618 level, much higher, 9,700 range. So my $60 to $70 range is, you can see why I'm so adamant. We're definitely going to get there. So do I have any issue owning SLV shares now? No, I'm already due. But I'm looking for potentially a pullback, and the more we pull back, the more I add. But buying it at 33 is still a good deal, knowing it's going to double, get that $60, $70 target. But I do expect after this latest run, go back to current price action, that we're due for a pullback. Amen? After this run, we're due for a pullback. And if this is a 1, 2, 3, 4, as 5 runs out of steam, we need that pullback screaming anyway. So even on the latest 1, 2, 3, 4, 5, we're finishing up that move. We're due for a 3 wave. That's why I think at least back toward the Magic Fibo. And if we can't hold that and gold really pushes down at 2,700 level, we'll probably even break this and maybe move down toward that $25 range. But that's salivate country, no matter how you slice it. Any pullback toward the Magic Fibo or lower is salivate country, especially 25 and lower. Man, that is buying Bitcoin at 15,000. And you know what happened there. So this is going to go ripping into the future. In my humble opinion, no matter how you slice it, James, we're going to see $60, $70 price action. No ifs, no buts, no ands, no exceptions. All right, let's continue. What about black gold, Texas tea, the Beverly Hillbillies? Well, with potential war breaking out, kind of warned us about this, that we break that 64, we're going to Magic Fibo. We break that, we were going to go test this next level in the 70, 75 range. We're right stuck in the middle of this. So if we get war breaking out, this thing should go ripping. And the bigger picture is we're doing from our recent high to low, we're going to do a 618 retracement right around 100. So Mr. Tucson, I think we're going toward 95, 105, kind of fine tuning 100. I'm long black gold Texas tea. I'm looking for this to continue. Once we start closing above this area, which we're testing it, we got a wick here and then we got a rejection again. So zoom in on the current price action using the same rinse and repeat principles. From the recent high to low, we closed above the 618. We have, Dan and others, a 75% chance we're going to 84. 70 plus plus, we're going to 87. And I think we're en route to this thing going much higher. Amen. En route for this to go much higher. I believe I have it in one of these platforms. It's running right now. Yep. And my first take profit's going to be up here about 94.50. Second take profit, just under 100. Third take profit, just under 105. And I'm looking for what? From the high to the low, a beautiful 618 retracement. And check it out. We got this weekly. Move this out of your way. We got this weekly cycling up. My monthly hooked and crossed to the upside. So the weekly is going to finish the up cycle. I am very bullish. And it may be we go to war or they take out some of their refining capabilities over there during the war. Then target is game on. Amen. Any questions? So I expect this to continue to play out. Take profit one, minimum, likely, high probability. We're going to go towards 100 and might even top out towards that 105 target. But from that high to this low, it's a 618 retracement right up in this zone. So I'm going to stay right where we are, Harold. Let this baby continue to run and shoot for the moon, Alice, to the moon. And on the charting platform, all that is, on the smaller scale, high to low, we're already going 84, 87, then 96 begins that first take profit up there. But from the bigger picture, we're expecting a 618 retracement from the high down to the low, 618 retracement. Boom. And even if we only go toward the lower end, 95, we're covered. So keep buying the dips on black gold Texas tea. And again, they blow up some refining action in Iran. This thing can go ripping higher again. And the writing's on the wall on the shorter term, zooming in. We have what we needed. Again, zoom up real big, stretch it out. We have exactly what we needed from the high to the low. We broke what? 618, right on that candle. So Ian, that candle right there tells me, right, Harold? 75% we're going to 84. 70 plus we're going to 87. There you have it. And then en route to 95, 100, maybe 105. But that's why I have this set up that way. Those are my target, 95, 100, 105. Boom. See ya. Monthly, weekly, monthly hook and across. Weekly's going to cycle. Everybody knows when you get a PAI hook and a trend momentum cross, that means the lower time frame, in this case, would be the weekly. It is going to cycle. Look, we're not even halfway on the trend momentum, a little bit more than halfway on the PAI. So what do I expect in the coming weeks? This thing just keep pushing, and price keep grinding. And if we do get some kind of action where they blow up refineries or something in Iran, man, this thing can go spiking up there lickety split. Just like we saw this latest move, right? That big candle right there went ripping. Just the threat? Well, this is more than a threat now, buddy. Boom. Keep buying the dips. We're going higher on Black Gold, Texas Tea, the Beverly Hillbillies. Any questions on that? Let's continue. What about Bitcoin? Still think Bitcoin is coming down to the Magic Fibo. For those of you trading crypto, definitely think we're due. This looks like the initial wave down. And remember what I said the other day, Harold? This is a 5 wave. And if this is corrective, we should not have a 5 wave down. We're due for a 3 wave correction. So expect that. This is 1, 2, 3, 4, 5. So I'm looking at least down toward the Magic Fibo. And again, it is sloping upwards right there. So we could take a few more days and we come down toward the mid to upper 90s at least, and maybe even break a little bit below that to give a good little test down here before we then go ripping higher. So Bitcoin's playing out just like we had anticipated. Kind of warned you about the same thing, got a deep retracement. I said, I don't think this is ready to go breaking out just yet. Still think we got to get a deeper correction. Sure enough, price is playing out almost perfectly. So what happens when we get down here? Opportunity for the next big run. And let's go to a higher time frame. I know there's a lot of lines on here, but we've learned a lot about Bitcoin, when to buy. We buy low, we sell high. Well, let's take you on a journey. The blue lines on the chart are the crypto halving, Bitcoin halvings, and we've had 4 of those. So we go back in 12, 16, 20, most recently April of 2024. The next one will be in 2028, which is already on the chart. And what do we know about Bitcoin? 12 to 18 months post halving, it goes on a run. Every time we get a halving, it goes on a run. Get a halving, it goes on a run. Get a halving, goes on a run. Get a halving, goes on a run. So that's what's interesting, that we know 12 to 18 months. Then Bitcoin has a crypto winner after its big 12 to 18 month run. You get a crypto winner low. Then you start grinding higher into the next halving. So we know of several things. A, Harold and others, We topped out in 17. If we drill down in this target, we topped out in 13, 17, 21. Hint, hint, hint. We're definitely going to top out in 2025, which we're in. I just think it's going to be more toward the September, October-ish kind of time frame when we top out. And then we bottomed out in 14 over here, right? Coming up, we bottomed out 14, then we rallied up, we bottomed out in 18, we rallied up, topped out in 21, we bottomed in 22. So what is the rhythm? Every 4 years. Top out in 13, 17, 21, 25, and we bottom in 14, 18, 22, 26. That's the plan. So I can already tell you, like I mentioned this past cycle, stretch that way out, move this over. When Bitcoin was at 20,000 and less down in this area, which happened in 2022, I kept saying this is a crime to be able to buy Bitcoin at 20,000 or lower, that it was going to go to 150, 175. And so far we got into the 100 plus, and we still got a little bit more to go. So we buy low in 26, which hadn't happened yet, right? So we know where Bitcoin's going and likely where the correction's going to take it during the crypto winter low, but we'll give you fine tuning like we did over here in 22. That 20,000 and lower is a steal. Anything 30,000 and lower is such a great deal. We'll have those parameters. I'm roughly shooting somewhere between 50,000 and 30,000 for Bitcoin after it rips up. It comes back down. Typical Bitcoin crypto winter low type of move. Well, I'll be able to give you this same insight we did here to hold it to go where. We're going to do it here and give you your new targets out to 2029. So we buy in 26, we sell in 29, we bought in 22, we're selling in 25. So it's roughly a 3-year investment. Amen? That's how you make a lot of money in the crypto arena, by buying low and selling high and utilizing this halving phenomenon, which they do. And the next one will be 28. So we should bottom sometime in late 26, start nibbling and positioning yourself for the next big crypto run, which halving is in 2028. And then we'll do 12 to 18 months post halving, pushes us out somewhere into the late fall-ish of 2029. So we're going to buy in 26, we're going to sell in 29, just like we bought in 22, selling in 25. Rinse and repeat, rinse and repeat, rinse and repeat. Now, back to current price action. What can you do for me now? Bitcoin's going lower. Not because I see a red candle, because I warned you about this when Bitcoin ripped up. I said, we're due for a bigger correction to come back down toward this Magic Fibo. And we even had a lot of that information on here with all the lines, everything set up. And sure enough, we even gave you, it's going to go down to 31.5, bounce to 33, and then do the same type of scenario. That was on gold. Well, Bitcoin, we're doing this for you, that we're coming down likely to the Magic Fibo, Harold. So does it mean it's just going to go down hundreds or thousands of dollars every day? No, could. But this correction, when you see 5 waves in a corrective mode, then you know that can't be the end for this to go breaking out. The impulsive move up, you need a 3-wave correction back down for the next impulsive move up. And this clearly was 5 waves. 1, 2, 3, 4, 5. So I said that the other week, the other day, this is the A. We need a correction for the B, and looks like it might have topped out there. And this is the beginning of the last C wave, and it should be a 5 waver, generally speaking. And this could be the 1, 2 working on the 3, the 4, the 5. And I'm looking at least the Magic Fibo, if not down to maybe the mid to low 90 area, but at least the Fibo before we then go breaking out. Amen? So while Bitcoin corrects, opportunity to buy the dip and shoot for what? 150 to 170. What else have we learned during all of these different halvings? Every crypto winter low to the end of the crypto winter, the halving and the crypto run for the 12 to 18 months, Bitcoin is at least 10x, 10 to 20x, but at least 10x. So this 15,000 down here, 10x of that was what? When you move the bigger picture, Harold, for our crypto winter low, when we were down here, got to move this over this way. Here's the crypto winter low for this last one in 22. That was 15,000 and change. So 10x that puts us at the 150 target. And if you look at your Fibonacci retracement extensions, Bitcoin from the prior crypto high to the winter low, we typically do a 1618 type of retracement. And we can see over the years, we've done exactly that. Sometimes we've done more than that, but at least that. And that's why that 175 target comes in. So 150 to 175 has been our target since 2022. And we're expecting it still to unfold that way. In the short term, yet again, look for a bigger pullback toward the Magic Fibo on the daily chart. Amen? And this is why you pay attention to waves and Elliott wave. That's my job. If you don't care about it, that's okay. I have a God-given talent to read and interpret price on a chart, and we're due for more downside before we go breaking out. Amen? And after that 5 wave, that can't be done. So this rally up had to fizzle at some point, and then we need another swing point low. A, B, C. Got it? Then we're going to go ripping and make our next run into late fall. September, October is kind of the plan, where we go blasting off to a 150, 175 area. Any questions on that? So all of these Mara, different stocks we talk about owning for the miners, I'm going to sell all of these. Mara, the Riot, Bitto, BTBT, whatever ones you may own, when Bitcoin gets up into its target zone, I'm going to unload these. And then I'm going to wait till 2026 to start looking at buying other crypto, Bitcoin, maybe more Solana. Look at Solana, what it did for us. Man, oh man, oh man. Solana, I don't think it's done here. I think it's still got more upside before it's done. But back in 22, we were bottoming out in the single digits. And it ran from single digits all the way up to about 300 bucks. Still think we're going to go and hit the extensions yet again. This is just simply a 618 retracement from the prior crypto winter low to the high. It's a 618 retracement area, and we're due to extend higher. So when does Solana get very interesting? When price starts to get back above 217 from the recent high to the low, we start getting above 217 on that move right there from the high to the low. We start closing above that 217 area. Then that gives us a 75% chance we can go to 319. 70 plus we'll go to 340. Amen? But this is when you buy. You buy when it's at the crypto winter low, and we sell when Bitcoin gets to its target. Then we rinse and repeat. Maybe Solana will do the same thing like it did this past time. It rallied into the prior crypto halving, got a big pullback in the crypto winter low, ripped. So we're going to do the same thing in 26 and hold it till 29. So stay with us and you'll see when we get to 26 if Solana is still the great, still one of those I like. I'll let you know. And when's a good time to buy? During 26, late 26 would be a good time to buy and then sell in 2029. Amen. And Ethereum still just kind of going nowhere as of late and just grinding in this zone. Bitcoin's pullback will probably pull this further back from the low to the high. I want to see this hold, this 618 area. So we need to move this up toward this zone. I definitely want to see this hold that 618 area on the pullback. And Bitcoin goes ripping, pulls Ethereum. Ethereum's been totally underperforming. And I used that story with silver versus gold, but silver's finally starting to break out. Ethereum has not. But if Bitcoin does what we expect it to do, I expect Ethereum at least to go back and revisit 4,000. If we can break 4,000, then it opens the door to our extensions, which are around 55, 6,000. Totally been underperforming as of late, but hey, still think there's a lot more upside for Ethereum. And especially when Bitcoin goes ripping to its 150, 175, I would expect Ethereum at least to be back at 4,000. If we can close 4,000, then 55, 6,000, making all-time new highs would come into play. Amen? Any questions on that? So let's circle the wagons. ES, for those of you in the markets, die and go to heaven on a point or two. Be careful to the upside. This is likely to give us the bigger pullback. And this is that very scary V-shaped recovery. And at no point have we had a 618 retracement yet. So that's screaming we need one. So I would like to see that sooner than later so that we can get the blow off top and go up to 6,600. If the markets just slough off everything, punch junk euphoria, and it continues, then expect we're likely going to go to all-time highs still again, but we're not going to get up into the upper blow-off top, 6,600. We'd be truncated somewhat, and then we get the Elizabeth, I'm coming to join you, versus we get a three-wave correction now from the tariff talk low to the current high. We'd love to see like a 618 type of retracement to set the blow off top, which again, if we get this, Dan and others, Harold, I'm looking for, several weeks of this, pushing us into July, maybe toward August, and then into the year rally. After a three-wave correction, we should go ripping into like that 6,600 zone. But this is critical zone right now. Do we continue to go on all-time highs? If that's the case, we're going to get the Elizabeth, I'm coming to join you, honey, much faster. If not, we get the bigger three-wave correction now, then we should go into late fall, into the year type of blow off top. Then it sets the tone for 2026. We start seeing the markets give us that big down move. Technical picture is on this chart. And again, when I go back to these higher time frames and I show you this bubble pattern, what we call the psychology of a market cycle, going back all the way to 2009, since the last market crash, we haven't had a 618 retracement going to monthly. You can see a little bit easier on the monthly. It's more vertical, but we haven't had a 618 retracement. So you take your low to any of these moves, none of them are 618. The biggest one from there to there was about a 50% for COVID, but still no 618. We're due. So what does that put us? From the crypto winter low to where we believe we're going to end up the blow off top around 6,600. That puts us somewhere in this 2,700 area, maybe as low as 1,800. So you can see from the low to the high, 618,786 zone where it's located. That's the big one. That's what I'm talking about. Minimum the Magic Fibo, which is around that 33, 3,500. But we're looking for a bigger degree, 618,786 type of retracement from the low to the high. And the low we're using is the February '09 low, roughly February of that last financial crisis low. Amen? That's what's scary. This is the technical picture is screaming. We need a 618 retracement. And we didn't get it anywhere along the way since this bottom here. No 618s. And that's why we're due. Amen? So in closing, Harold, we get this 3-wave correction and we get a little 6-wave correction now off of the COVID low. Love to see that. If we come down in that 55, 53 zone, this dark green box, and we make that higher low, then that puts us in great position for a big blow off top to push us in toward that 65, 6,600. But be careful. I would not be buying long right now. This is screaming pullback, 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 pullback. And if I'm wrong on this, then expect that we're not going to get the 6,600 all-time high. We'd make some sort of new high, but then we'd get the Elizabeth, I'm coming to join you, honey, sooner than if we get a correction followed by the blow off top. Then Elizabeth, I'm coming to join you, honey, happens toward 2026. NASDAQ, pretty much the same thing. We're testing that downtrending lower highs, which has been here since December. And we made a lower high, big pullback, lower high. So this isn't conducive when you see lower highs and lower highs for this thing to go breaking out. It even tried the other day to go breaking out, but it's showing a big red candle now today. So this is a big warning, 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 warning. We may need that bigger correction. So if the plan is to do what it's supposed to, that's a 3-wave correction somewhere around about 19,000, 18.5 area. So I'd love to see this, Harold, in the coming weeks into July, maybe end of July. Then we do blow off top. And if that happens, blow off top should be somewhere in that 25 to 26,000. We shall see how that plays out. But if we start grinding up to all-time highs now, I think that'll be truncated somewhere around that 23-ish level. Then we get Elizabeth, I'm coming to join you, honey, versus bigger correction, blow off top toward the end of the year, early next year. Then the Elizabeth, I'm coming to join you, honey, after that. Amen? So either way, be careful. I am leaning more toward the correction now so we can get the blow off top in toward the end of the year. Any questions on that? All right. So with that, I'll say good luck. God bless you. May the pips be with you. I'm humbled and honored to be your mentor and instructor. Join us again tomorrow. And as we like to close, that's it, and that's all.